Ask any Australian whether gambling winnings are taxed, and you will get a confident answer: no. And for most people, that answer is right. But for a particular kind of player, regular, systematic, skilled, and profitable, the answer can flip, and the ATO has shown it is willing to assess gambling winnings as business income. I am Benedict Youn, tax lawyer at Australian Tax Experts. In this presentation, we will look at the general rule and why it exists, the point at which a punter becomes a business in the ATO's eyes, why poker players sit right on that line, and a real case where our office had a $200,000 poker assessment removed in full. 4 markers frame the topic. $0. The tax a recreational gambler pays on their winnings. Windfalls are not income, and the flip side is that losses are not deductible. 100%. The proportion of winnings that becomes assessable if your gambling is characterized as a business. Everything changes with that one finding. $200,000. The income tax assessment the ATO raised against one Sydney online poker player, which our office had removed in full. We will come back to him. And 1990, the year the ATO issued its ruling IT 2655, which still holds today. Mere punting, however systematic, will rarely amount to a business. The law here is old, stable, and full of judgment calls at the margin. Start with the rule everyone knows and the reason behind it. Under Australian tax law, gambling receipts are generally not assessable income because they are windfalls, the product of chance rather than the exercise of business skill. The lottery winner, the lucky punter at the races, the tourist who hits a jackpot, none of them has earned income in the tax sense. Fortune has simply smiled. 2 consequences follow. The winnings are not taxed, and, the part people like less, the losses are not deductible. You cannot claim a bad year at the track against your salary. This position is settled. Decades of Australian case law support it, and the ATO's own ruling, IT 2655, confirms it. Recreational gamblers can relax. The interesting questions start when the word recreational stops fitting. So how does a punter become a taxpayer? Think of it as a journey along a spectrum. At one end, recreation, casual play, driven by chance, comfortably outside the tax net. Move along, and system and scale appear. Regular, organized play, with substantial sums flowing through. Further still, and the conduct becomes genuinely businesslike. Detailed records, bankroll management, a clear profit intention, and results driven by skill rather than luck. At the far end sits the ATO's conclusion. A business of gambling is being carried on. The winnings are assessable, and the losses deductible. Most players never leave the first stop, but the further your play moves along that line, the more interested the tax system becomes in your results. When the question is contested, courts and the ATO weigh a familiar set of factors. Organization and system. Is the activity carried on in an organized, systematic, business-like manner? Records kept, methods followed, time committed like a job. Profit-making intention. Is the play genuinely directed at earning a living rather than entertainment with an upside? Skill and judgment. Do the results depend on the exercise of skill or on pure chance? And scale. Are the amounts wagered and the sheer volume of play substantial? No single factor decides the question. The answer comes from the whole picture, and IT 2655 adds an important thumb on the scale. Mere punting, however regular, will rarely be enough on its own. Something more businesslike is needed. Which brings us to poker. The game that sits closest to the line. Poker is different from roulette or the pokies because it involves genuine, demonstrable skill. A skilled player can achieve consistent positive results over years of play, an outcome that is statistically impossible in a purely chance-based game. And that consistency is precisely the problem. A player who wins steadily, month after month, looks less like a lottery winner and more like someone earning a living. The ATO has noticed. Regular, profitable, skilled play is exactly the profile it has assessed as a business in some cases. But, and this is the crucial point, skill alone does not decide the question. The whole activity must bear the characteristics of a business. Plenty of skilled, winning players remain, in law, recreational gamblers.
Here is how the line gets argued in practice. A Sydney taxpayer came to us after the ATO assessed him for almost $200,000 of income tax on his online poker winnings. The ATO's theory: his play was regular, skilled, and profitable, a business. Our response was a formal objection built on the whole of circumstances test. Viewed properly, his activities lacked the hallmarks the cases require. This was not a systematic commercial operation. It was a talented player, playing. The objection succeeded, and the full assessment was removed. Two lessons travel with that story. First, the ATO does pursue these cases. The risk is real. And second, the line between player and business is genuinely arguable, and it is worth arguing properly, with the case law in hand. You might wonder how the ATO ever learns about poker winnings in the first place. The answer is that nobody needs to report you. The money reports itself. Transfers from offshore poker platforms and betting sites into Australian accounts are visible to the ATO through AUSTRAC, which captures international money movements. Large or regular deposits with no declared income behind them invite the obvious question: where is this coming from? And answering poker winnings does not end the conversation. It starts the business of gambling analysis we have just walked through. Add the lifestyle lens. Play that funds a standard of living beyond your declared income, and you have the classic profile that attracts a compliance review. If your winnings are substantial, assume the ATO can already see the deposits. It is worth pausing on an irony at the center of this area. If gambling is a business, the winnings are assessable, potentially reaching back across multiple past years, with penalties and interest on top. But the same finding makes losses deductible. And since the overwhelming majority of gamblers lose over time, a rule that taxed gambling too readily would hand the revenue an enormous bill in deductions. That is one practical reason the business finding remains the exception rather than the rule, and why the ATO chooses its cases carefully. For the taxpayer, the lesson is about honesty in the analysis. The same factors that would expose a winning player support a losing one claiming deductions. The characterization has to be right, not convenient, because it binds you in both directions. So what should you do if you play seriously? 4 steps. First, understand your profile. If your play is regular, skilled, and profitable, get a proper assessment of your business classification risk before the ATO forms its own view. Second, keep records anyway. Whatever your classification, contemporaneous records of sessions, stakes, deposits, and withdrawals are your best defense if questions ever come. Third, be ready to explain the money trail. Know how you will evidence the source of your deposits, because AUSTRAC data may prompt the question years after the event. And fourth, if the ATO has already assessed your winnings as taxable, challenge it. The objection route works. We have taken a $200,000 assessment to nil with it, and the grounds in these cases are often stronger than taxpayers assume. At Australian Tax Experts, tax lawyers and accountants handle these matters as one team. We provide position reviews, a confidential assessment of whether your play could be characterized as a business and what to do about it either way. We run objections and disputes, challenging ATO assessments on gambling winnings with the case law and the evidence properly marshaled, including that $200,000 assessment removed in full. And we provide audit representation, managing AUSTRAC-triggered inquiries and source of funds questions from the first letter, so a data flag never becomes a runaway audit. If the ATO is asking about your winnings, the worst move is answering alone. If the ATO has assessed your gambling or poker winnings as taxable income, or you want to understand your position before it ever asks, contact Australian Tax Experts for specialist, confidential advice. Visit australiantaxexperts.com.au/contact. Thanks for watching,
And remember, this presentation is general information only, not personal tax or legal advice.